about macros, because later today we are expecting to see the CPI numbers, and Varun is joining us to understand what we can expect, what are the polls indicating in terms of what we can see in terms of the CPI and the core CPI numbers. Varun.
Well, so the Reuters polls actually expects the CPI number to come at around 1.76%, and this would be the 9th straight month where we are seeing a decline in the CPI number, and in fact, a 6th straight month where we are seeing the CPI number below the overall tolerance level of RBI, that is around 4%. And this time the CPI numbers are expected to fall below the 2% mark, that is around 1.76%. If you look at the overall numbers, it is the food inflation that is going to impact the overall CPI number, because it's the vegetable inflation which is on a declining trend, and that would impact the overall CPI number. Also, if you look at the rural and urban CPI number, they have been on a declining trend, and we are expecting them to decline in this month also, that is in the month of July as well, and that will impact the overall CPI numbers for the month of July. Also, if you look at the core CPI number, they are expected to moderate to around 4.22% in the month of July. So overall, if you look, the CPI numbers are expected to decline for a 9th straight month, and they are expected to come at around 8 years low, that is around 1.76%.
Okay, let's pick up on that conversation forward. We've got Sonal Varma, MD and Chief Economist, India and Asia ex-Japan at Nomura, joining in on the show right now. Sonal, hi, morning. Good to have you on the show. What is your own outlook of today's CPI release? What do you think would be the factors in play, and would we clearly see an ease off from the previous month too?
Yeah, hi. Yeah, absolutely. We think it's going to be an across-the-board moderation. So on headline CPI, we're expecting a moderation to 1.3% from 2.1%. So actually going below the RBI's 2 to 6% tolerance band. And we think it'll be driven by a combination of both food inflation getting into a deep deflationary territory, plus a moderation in core inflation. So core, if you recall, had popped up to 4.5% in June. That was partly because of the impact of gold prices, some of which has reversed. So we are also expecting core inflation to moderate to 4% from 4.5%.
All right. Hi, Sonal. Morning. This is Shrishti also joining in. But what do you make of the upcoming projections for the inflation print? Because just during the RBI meet, they have sticked to that 4% mark, but they're also hopeful that going ahead, we might see an inch up. When will you think that? For now, yes, we're going to be expecting some moderation, but by when can we see a jump up?
On average in FY26, RBI did lower its projection to 3.1 from 3.7%. On our estimates, actually, inflation is likely to undershoot even this revised estimate of the RBI. So for FY26, we are projecting 2.7% on average. So on the quarterly projections, we think we'll continue to see further downside surprises. And in terms of why, I think, the food moderation we've seen is exaggerated because of vegetable deflation, but it is actually a more broad-based moderation in food prices across pulses and cereals as well. And the outlook on growth looks less rosy compared to what it did 2 weeks back. And if there is that negative demand shock, then underlying core inflation in our view is going to stay benign. So yes, base effects will push up CPI inflation early 2026, but I would underline its base effect. The momentum measures in inflation actually suggest underlying inflation is very well, in fact, below the 4% midpoint target of the RBI.
So now, since everything around our lives right now is, being run by trade wars and geopolitical tensions, tell me, does it have any bearing on inflation in India as well as globally? Or would it in the near term?
I mean, it definitely does have some impact. For instance, in the US, the question is whether tariffs are going to be inflationary or not, and to what degree. And so, for instance, the US core CPI reading we are getting tonight will be an important aspect to make that judgment. But on the other side of the equation are basically a lot of these exporters that are exporting to the US. And in a number of product categories, what we are seeing is that exporters are taking a profit margin hit. In India, for instance, if this penalty of 25% on Russia stays and the announced tariff rate of 50% sticks, then the negative impact on growth, will mean that there is excess supply of a number of potential categories. So while tariffs are, inflationary in the US, they are actually disinflationary in rest of the world, including in India. Partly because of this tariff impact and what it does to China's overcapacity and some of that hitting other shores. So it is important, but I think for India, we think disinflation is going to be the big theme.
So that's the next big theme to watch out for. But Sonal, let's talk about food inflation in particular. We're expecting to see a year-on-year decline, and given the way the monsoons have been this year, very healthy, what's your outlook on vegetable prices, pulses, food grains, cereals? Where do you think we're headed on the food inflation front?
Well, we're going through right now, I guess, the trough in terms of food inflation. So the negative readings are likely to continue for some time. I think it's important to bifurcate the volatile components of food, such as vegetable prices, where you can have extreme highs and extreme lows. Currently, we are going through the lows. Vis-a-vis the more durable components of food inflation, the likes of cereals, pulses, and some of the other items. And the favorable monsoon season plus the stock carry forward stock we have on some cereal does suggest that the more durable component of food inflation should also stay benign. So on the whole, we're going through, as I said, the lows on food inflation, which is an exaggeration, but the durable components are also looking favorable. So food inflation should not be a challenge in FY26 in our view.
All right, so that's the take when it comes to the food inflation. But Sonal, since we have you with us, yes, of course, the markets are waiting for the India inflation print, but help us understand that today, of course, all eyes will be on the US inflation print as well. What are you making and what's the hope to get, what number can the markets really see on that front?
Well, for US, the focus is primarily on the core CPI, and consensus expectations are for core CPI to be up 0.3% on a month-on-month basis. Our Nomura's estimate for core CPI is a 0.34% on a month-on-month basis, just in 2 decimals, so just about rounding up at 0.3. We do see signs that goods inflation likely increased because of the tariff-induced price pressures, plus some of the more volatile components of services inflation, like airfare, which had dropped. We are also expecting some increase there. And going forward, as the effective tariff rate in US increases, we do think there'll be more evidence of goods prices moving higher in the US. So the next 3-4 months, we are expecting above target inflation to sustain in US, which is going to complicate the Fed's decision given the weak labor market report.
Okay, Sonal, so good to have you on the show. Here's to disinflation times and a further cool off. Good speaking with you on the show.
Thank you.